Welcome to Empire Building. I'm Wendy Papazan, and together with my 4 co-hosts, we bring you weekly unfiltered conversations about leadership, growing a big empire, and living on your own terms.
I'm Kimber Lovett-Minkiti. We are investors and wealth builders with over $75 million in combined net worth.
I'm Sarah Reynolds. We are visionaries who built more than 50 businesses with over $122 million in annual revenue.
I'm Tiffany Fikes. We've led thousands of people and do it all while being pretty good moms.
And I'm Seychelle Van Poole. We are your podcast to learn how to build big businesses and even bigger lives.
Welcome to today's podcast. It is Wendy and Sarah today, and we are excited for what's in store. Wendy, let's tell our listeners, what do we have in store for them today?
Yeah. Hi, Sarah. So we're so excited because we have a special guest. And you guys know we don't always have special guests, but this one's really special. We've got Amanda Hahn on with us today, who is a business owner, entrepreneur, mom, wife, internet personality, I guess. Is that what we call you, Amanda? You're an influencer and a CPA and real estate investor. So Amanda and I met, I guess, a few years ago at InvestHer, and I was a little starstruck when I met you. And it's just been fun getting to know you. And I've learned so much from you through the years because you're just out there making what many would consider a very unsexy topic, taxes. Pretty sexy. And your hair is fire today. So speaking of sexy, you look great. So welcome, Amanda.
Yeah, thank you, ladies. Thank you so much. I am super excited to be here. And yeah, I love that we were joking about my hair because I actually did it specially just for today's podcast. I don't know if I ever told you this, Wendy, but I am also a fan of yours because Brandon Turner, who's one of my clients, he talks about you and Jay all the time.
Oh.
So actually, when I met you at InvestHer, I texted him and I said, "Oh, I just met Wendy."
Oh, that's so sweet. So give us a little background, Amanda. Tell us your story. How did you get here?
Gosh, I think I grew up just like any other American. I was taught by my parents to, get good grades, go to school, get a stable job. My mom was an accountant, so she said, you're going to grow up and be a mom. And so being an accountant is really good. It's stable. You don't have to travel much. Don't have to work a lot of overtime. And so, yeah, it was kind of just what I did, just, kind of follow what my parents told me to do. I think luckily it ended up that I actually liked doing accounting and numbers and that kind of stuff. So that piece of it worked out. Not a lot of people know this, but my grandparents were actually real estate investors. Oh. And we grew up in the condo complex that my grandparents owned. So we were like, growing up, my cousins and I were like the landlord's kids. We were the ones, unfortunately, that had to go knock on people's doors and collect rent. It wasn't like the best of neighborhoods. So yeah, we helped with turnovers. We helped to collect rent. And I never wanted to be a real estate investor because my grandparents were very hands-on. You can imagine living where your tenants are. And I just wanted a job in corporate America, have nice nails, talk on the phone, wear a suit.
Okay, well, how old were you when you were door knocking for rent collection?
Oh my gosh, 10. Yeah, probably like 10 or 11. Yeah, my cousins and I would go. And this is interesting because my grandparents are immigrants. And so my grandma didn't speak English. So we were there to speak for her, right? So she will knock on the door and we'll be like, oh, grandma needs rent. So yeah, super unpleasant.
What was your weirdest memory from that? This is so fascinating. I love this. Yeah.
Oh, man. So my grandparents were very frugal people. And like I said, my grandpa would walk around the complex and, take care of it from like mowing the lawn to cleaning things up. It was a pretty big complex. And I remember one time he came home with a pair of used sneakers and he asked my mom to wash them because he said, it was like his size. So would wash it so he can wear it. And I was just super scared. I was like, that is really disgusting. Like, I don't know whose shoes they are. And wasn't sure where it came from. So there's little memories like that. But, there was also really good memories too, because my cousins and I, we got to handle a lot of the guest turnovers. So when we were really young, we were allowed to like write crazy things or paint things on the walls when they were doing kind of the rehab part of it, swinging hammers, breaking down stuff. So yeah, it wasn't all scary, crazy, sad stuff. So there were some really good memories too.
That's awesome. So that's what led you to get into accounting, right? So you got into accounting in terms of numbers and in terms of what you wanted Nice nails. What are your nails? I saw your hair, but no.
I have kids now.
I know how that is. Well, I know since you've become an accountant, you've built quite the empire. Empire building is a little bit different than actually knowing the craft, right, of what you're doing. So tell us a little bit about the empire that you built.
Well, it just so happened that after college, I got a job at one of the big four public accounting firms, and I accidentally ended up in the real estate group. So my whole career was in helping with tax planning for real estate. My clients in the old firm was all super, super wealthy people. And my husband was actually the person who he read Robert Kiyosaki's Rich Dad Poor Dad book. And he told me we must invest in real estate. That's kind of like, what people do. That's what our clients do. I pretty much thought he was crazy, right? Because again, I grew up thinking I never want to do real estate. So I'm really glad that we took the plunge years ago. And we really started our firm because we realized that average Americans, average investors don't get access to tax planning like our clients did at the big firms, And so that kind of got us on a mission to say, hey, how can we bring this same kind of concepts to just everyday investors? Because the tax law is the same. There's only one set of laws, but really making people aware that they can use a lot of these same strategies. We might have fewer zeros behind the numbers, but the concepts are exactly the same.
I love that. And what does the rest of your empire look like? So you got a big business. How many people work for you?
Gosh, it's not that big. It's probably not as big as you think. We have just about 20 people in our firm.
That's big.
Yeah, so we're really fortunate. A lot of our people have been with us since the beginning. For us, it's really difficult to find people to add to our team because we're looking for something very unique. Most accountants, I'll probably get some hate comment on this, but most accountants are pretty straight, boring, inside the box. And so for us, what we always try to look for in our team is people who are not just good technically, detailed and understand the law, but also who can be creative too in terms of how they look at things. So yeah, we're really fortunate to be able to kind of build a team, with people who have those two unique traits, detailed, but also creative.
I love that. And you guys have published a few books.
Yes. So we published 2 books by Bigger Pockets. It's really interesting. So the story was my husband and I were on a cruise years ago when internet was really expensive on cruises. And so what I did is I bought a bunch of tax books with me so I can read them. Because that's what tax nerds do, right? On a vacation, we read some books.
Say, how do you say you're a tax nerd without saying you're a tax nerd? Yeah.
And then what I realized was like all the books that I brought with me from other CPAs were so boring and dry and just very technical, lots of numbers. And it was kind of like an aha moment where I was like, how can I write something for, again, the non-CPA average investor, write something where they can actually understand and feel empowered to do something, if they feel like they're paying too much in taxes. So yeah, just drew out a table of contents and I sent it over to Bigger Pockets. And I just said, hey, I don't know if you guys are interested if anyone would ever read a tax book, but here was kind of my idea. And that's how it got started.
I'm loving hearing your heart intertwined in all of these stories, even from the start of writing the book. But then also, I want to sort of go back with your story because this week I've been really studying, going back to like multi-decades ago when I started studying the book Good to Great by Jim Collins. And in the book, he talks about the hedgehog concept. And one of the sort of circles of the hedgehog concept is passion and heart. So you shared about you worked for a big firm in the real estate division, but then you created your firm your empire that you have built now for more small business, it sounds like. Like what led to that decision? Because I think that I'm guessing it has to do with heart, but I would love to hear what led to that decision because that was probably a really big decision in your life.
Yeah, it definitely was, leaving like the comfort and the prestige of working for a big firm like that and going out on our own was difficult. We had our own secretary's mail room to meet, right? I remember my husband Matt, we were like, all right, well, who's going to send the mail out? Oh, me, I'm going to drive that. Who's getting the supply? Okay. What we are doing everything start to finish. We're cleaning the toilets in the office. And so for us, it was so rewarding because one of the things I think that was missing when we were both working in the big accounting firm was our clients were a lot of the big real estate investment firms. And so when we save them money, you save them a couple $1 million, you don't really see any impact was kind of like, oh, great, maybe the CFO gets a bigger bonus or something like that. But we don't really see much beyond just the numbers. Versus when we started meeting real estate investors, if we can save someone even $10,000 in taxes for someone starting out, they really feel the impact and they'll tell us stories about, oh my gosh, what you've helped us do is life-changing. And that part of us is so rewarding for us, when people share stories like, oh, because we did this, now we have this amount of money and I used it to do XYZ. So that was the big rewarding factor for us to be able to kind of help out, give back in that way.
Well, so what was the decision point when you were at this big firm and then you decided to kind of go out on your own? Was there like a lightning moment or just a gradual understanding, or what did that look like?
Yeah, it was kind of a gradual thing. So my husband actually left first. He went to another firm that was associated with Robert Kiyosaki at the time. And so he would go to these conferences that Kiyosaki's team had, and he was one of the tax advisors, so teaching people. So of course, when you're at those events advising, you're also there learning too, right? So there he was learning about real estate, learning about how to build a business and the whole cash flow quadrant. And so it was kind of slowly over time, we were both still working and then just kind of starting to meet more and more people and then realizing there was a need in that specific area. Believe it or not, there was a point when we thought we would not be CPAs anymore. Because a lot of our clients were doing apartment syndications. We thought we would stop working and just do apartment syndications full time. And then we realized that neither one of us were really good at a lot of the things that were needed, like raising money, negotiation. Like those were the things that both of us were like, ooh, really don't want to do that. And so we came to the realization that we have something really unique to bring to the industry in terms of tax savings. And those are really the things that we were passionate about anyways. So yeah, we kind of went from tax to try to do real estate and then back to, okay, this is really what we wanted to do.
Well, and what does your real estate empire look like? What have you guys invested in?
Yeah, it's funny because I tell clients this all the time too. Our portfolio kind of changes as we go through different seasons in our lives. So
please tell me you own a condo complex.
I do. So, but we don't live there, thankfully.
Yeah. Okay.
So yeah, when we started out, it was like house hacking. So we did all that like beginner stuff. We were really hands-on, a lot of like this BRRRR type of buy rehab things, really hands-on with our portfolio. A lot of our things are in Vegas, which is where I'm from originally. In the last couple of years, because kids and kind of growing our business, we've gone more on the passive investing side. Because I think in this season of life, I think we have more funds that we can invest. And right now, our focus is more kind of on the kids and family. So we want to leverage other people's expertise to continue to build real estate for us. And yeah, and in the future, it might change. So I tell my clients, there's not a right or wrong way to invest. You just have to look at what season you are in your life and make sure that you're investing in a way that fits your lifestyle needs as well.
Yeah. Well, I can tell you as someone who did a lot of investing before I had kids and then started my real estate business, it's very distracting to run even a business of 20 people and have a family. And so now that my kids are a little bit older, I'm more circling back to the different kinds of investing because you just have the mental space for it.
Yeah.
Just the mental space to like review deals. And especially when your kids are really little, it's just hard to do at 11:30 at night.
Yeah. Yes, for sure. It's really interesting because I do feel that too. Like my kids have a big age gap, but even like my older one who's now 13, a lot less effort needed from me, right, than like my 5-year-old. And we have a lot of clients who do what you're saying. They did a lot of real estate, they slowed down. And then when the kids are high school and older, now they're like, oh, I'm so excited to get back into real estate and kind of just building the portfolio a little bit differently.
One of our sort of missions on the podcast is to really amplify women in business's voice. And Wendy had asked you about your portfolio. I would love for you to give us a little bit of a brag about it, meaning like we want to amplify you because you are a powerhouse. Tell us about your portfolio for investing because I think our listeners really want to learn from you. And it shows all women that we can talk about what we've built.
Gosh, I can't talk about real estate without talking about taxes, right? So I have to bring some tax component to it. One of our first properties was like a house hack we did. So we moved out, turned it into a rental. And we sold it a couple years later so we can get all that money tax-free. And then from there, then we invested in a couple other different deals. So our portfolio, we have condos, we have small single families, most of them in Las Vegas, all long-term. We have clients who do creative things, midterm, short-term, but all of our stuff currently is just kind of the traditional long-term rental properties. Those are the stuff that we're unfortunately still somewhat hands-on. So I was a little bit spoiled because my mom used to live in Las Vegas, and she was sort of my pseudo property manager. When I had issues, mom could always step in and help out. But she's since retired, and now she's in California with me. So those things now I have to be a little bit more hands-on, even though we're remote with respect to the, Vegas portfolio.
You lost a property manager, but gained a babysitter maybe, or?
Exactly. My mom is too busy now with all of my kids to do real estate stuff. And so that's kind of all the stuff that we're really more hands-on. My grandma, unfortunately, passed away a couple years ago. So I did inherit part of the condo complex that we used to live in.
Wow.
And it's funny because, in my family, everybody decided to keep it because for sentimental reasons. They're not the best properties, but they do decent. And so.
Well, you live there with all your cousins. That's amazing. Like, you should write a book about that. It'd be incredible.
That's what I love about real estate in general, because it literally changes family trees in terms of wealth building.
Yeah.
And so that's such an example of that, to have a condo complex that your grandparents owned. That's amazing. So you mentioned you're a mom.
Yeah.
You're a social media influencer, or what was the new title we're supposed to say? In the beginning, I was like, I haven't heard that. Internet personality.
Oh, okay.
Yeah. Yeah.
And a business owner. So many of our listeners are in that boat. Business owners, they might not be a social media influencer, but they're moms, wives, juggling a lot of things, right? And so what kind of help in terms of at home? What are the things that you lean into in terms of how to handle all of that?
For me, it's kind of an unfair answer, but for me, it's my mom. She retired at the same time I had my second one. And so she does so much to help out with all of the kids' stuff. And my husband and I travel quite a bit for work, for speaking and things like that. So really, really fortunate and blessed to be able to have the help from my mom. But, before she retired with our first one, we didn't really have any help because my mom and my mother-in-law were both working and we were kind of on our own. I leaned in a lot to friends, neighbors and friends who had kids around the same age and were able to play together or just help pick up and drop off, right, on the days when I can't be there. So just having that local community was super, super helpful. My kids are very into sports, so I always made sure that we had really close friends who were on the same sports teams, just in case there was a time where I can't get to practice, pick up, or something like that.
Smart.
Yeah, well, it takes a village.
For sure.
Okay, well, you're probably like, okay, Wendy and Sarah, are we ever going to talk about taxes? Here we are, 21 minutes in. So I'd love to talk about taxes. So a lot of our listeners are in the real estate space, either as investors or realtors. And I would love to hear just some maybe general tax advice you have for either realtors or, people who are solopreneurs or run a small kind of practice. What are some things that they come to you and you tell them what they need to do and they're kind of shocked by it? They're like, oh gosh, I didn't realize I could do that.
It's always different person to person when I talk to in terms of what they already know or don't know. But I feel like, realtors, whether it's real estate agent, real estate brokers, it's sort of the best occupation to have if your goal is to also build wealth in real estate, right? Because it's sort of like you're already in the business, you already see the deals. And unlike me, like a CPA having to learn how to invest in real estate or a doctor having to learn how to read a closing disclosure, right? So it's something that's already there. And investing in real estate as a landlord just comes with so many amazing tax benefits. I feel like it's a no-brainer. There's almost no reason why someone who's a realtor should not also own real estate properties. Outside of rental real estate, tax-wise, because commissions is considered active income, which means you don't just pay income taxes, you also have to pay into Social Security and Medicare and things like that. Most often it makes sense for that kind of income to be earned inside some kind of a corporation rather than just in personal name. And the reason for that is because we get to save a little bit on self-employment taxes when you have all of that income going through a corporation. So, but I think that's a piece that sometimes people are confused by, like, if I do a corporation, is this so much more complicated? Do I have to like do all these other paperwork? From the empire builder's perspective, it's actually not that different. Yes, it is more paperwork, but if you have a good CPA, those are the things that they handle for you in terms of payroll and filing taxes and all that. So for anyone who's like, I think wondering, should I continue in my personal name or should I go to an entity? I think the first step is to have your CPA help you do a cost benefit analysis. Like, how much is it going to cost me to form this entity for you to file my tax returns? And how much do you think I'll actually save in taxes? But the answer to that question will differ from person to person, depending on like how much income you're making.
Would you say that's the biggest sort of mistake realtors make on their taxes? Meaning, if it is a benefit to be a corporation that most aren't? Or do you see that most of the time in terms of a mistake or something that realtors don't know when it comes to their taxes?
Well, I don't know if that would be the biggest, right? If you're working with someone who's pretty tax savvy, I would assume you're already in a corporation. I think something else, maybe not specific to realtors, but just, taxpayers in general, is not really understanding what are tax deductible. Like, what can we write off? People always tell me like, oh yeah, I hear you talk about this, and this, but my CPA says I can't because I don't have enough income. I can't because I don't have a legal entity. And so it's really important to understand that's actually not true at all. So if you're a realtor, regardless of whether you operate in a corporation or an LLC or just, Wendy or Sarah, we are able to take advantage of all of the same write-offs. So you don't have to have a legal entity. If you're just someone like dabbling in real estate, like I just want to get started, I don't know if I'm going to be an empire builder yet, I don't want to spend the money for entities, still track all of your expenses because they can't be used to offset your income with or without a legal entity.
Okay, so I've got a question about that with write-offable things. So I've got a team of about 130 agents, and probably the most common question they ask me about this, and I always tell them I'm not an accountant or anywhere close, is can we write off our hair and nails and clothes in real estate? Like as a realtor, because we have to look good, they say. They tell me we have to look good. So is that write-offable?
Write-offable. That is such a good question. It depends on what it is. So clothing specifically, if it's clothing that has your company logo, right? Something that is branded for you, then you could always take it as a tax deduction. So if it's, whatever the branding is, your logo, those could always be, because IRS says that's sort of like a uniform. And even though you could wear it to other places, they say, well, the primary purpose of that is for branding.
Yep.
But otherwise, if you just buy a nice dress to go to a ball, unfortunately, if you're audited, IRS will likely say you can't take a tax deduction. And the reason for that, just so you know, is because their position is that you could wear that to something else, right? So it's not specific for this specific thing. Hair and nails, kind of a similar thing. What I typically tell clients is if you're getting it done for a specific event, like you are speaking somewhere, you're getting a photo shoot for your cards or your books or something like that, then yes, there's a clear correlation with, okay, I'm getting this done for this specific marketing thing.
So if you're speaking on stage or something like that.
Exactly.
That's so good to know. Have you ever been audited, Amanda?
I have not been audited.
Sarah, have you?
Nope.
No. Okay. Yeah. Knock on wood, all three of us. Yeah.
So IRS got $86 billion additional funding for audits. They indicated that a lot of that was going to be geared towards real estate. And because our firm is heavily skewed towards real estate investors, we have seen an increase in audits with our clients. I actually did a webinar for our clients talking specifically about audits. I just published a YouTube about audits. And it's really interesting because I think CPAs tend to scare people that audits are like super scary, don't do any of this stuff. And that's what I was sharing, taxes is like business. A lot of these things you have to make a personal decision on whether it's a risk I'm willing to take or not. But in my experience, auditors are actually nice, reasonable people. They are not monsters that people kind of put them out to be. And so, we know there's increase in audits. It doesn't mean we should give up tax strategies. It doesn't mean we should, just pay a bunch of extra in taxes unnecessarily. What it does mean is you just want to make sure you have good documentation so that if you're audited, you can support these things.
So I have a question for you. So my husband and I have been kind of on what I would call a tax journey the last couple of years. I think that, we have multiple businesses. We have 6 or 7 businesses that we run. We got a lot of real estate investments. And I think we've always taken sort of the real estate investments. We've really done a good job of taking deductions for that. And yet I think a part of us has always been like, well, we're supposed to pay taxes because I'm a good citizen and I think it's important and I believe in social services and all this kind of stuff. And then I think 2 years ago, we woke up and we were like, okay, this is insane. We are not doing this right. And so what would you say to someone who has, because I don't think our mindset's too different. I think a lot of people feel that way. And then you can maybe even start that way. And then you get to a certain point in your life and your business and you're like, wow, I'm really giving a lot to the government here. So can you speak to that?
Yeah. And I think we have a lot of clients that are similar. And not just clients, but just people in general who feel like not paying taxes is a bad thing, right? Like, oh my gosh, you don't pay taxes, or this politician doesn't pay taxes. But the reality is what you're trying to do when you save on taxes, it is because you're doing all the right things that the government has incentivized you to do. So sure, you're not paying tax dollars, but you have also reallocated your money towards those government incentives. And our example for today's conversation is real estate, right? So instead of paying it to tax, we've bought more real estate. We have improved on our current rental properties. And so you are still giving back to what the government's major incentive plans are. And there's nothing wrong with that. It's funny because the whole tax system is set up to incentivize and or punish, right? Effectively, it's what it's trying to do. And as a CPA, I see that in action, a couple of years ago, and you guys probably see that on the real estate side too, when we had 100% bonus appreciation. Everybody was buying out properties, everybody's rehabbing properties. And now that it's being a little bit lower, we all feel it. Okay, well, I could buy more real estate, but, I'm not getting as much of a benefit. So you can see how, the incentive on the tax side really encourages our actions as investors and business owners.
Yeah, I had a aha about that as well a few years ago, very similar thinking to Wendy. And so what I'm hearing you say, and just to make sure I understand and also our listeners, is that based on the law, the government has basically incentivized where they see the social work needing to be done because they've done an analysis and said, okay, we need more home ownership or real estate ownership in this area. If you buy here, you get a bigger tax benefit. And so that is a way of helping, is my understanding. That sort of changed my view and started making me pay attention more to tax law and the benefit of certain things. Is that right?
Yeah, absolutely. And if you think about it, what we always tell our clients is if you want to save on taxes, we are always working with the velocity of money. How quickly is money being worked? How is it being reinvested to grow, right? Wealth building, empire building, however we want to describe it. Because if we just sit on money, if we sit on cash, there's almost no tax savings, right? How do we get tax deductions? How do we get depreciation? We have to reinvest it back into the economy, back into assets, back into our team. And so it's, of course, when you do it correctly, you get the benefit of building your own wealth, which I think part of it is why people struggle with, man, am I helping the people? Because I'm really helping myself, right? By building all this. But important to understand, yes, you're also building the economy and the housing market at large. You're doing exactly actually what the government wants you to do.
And that makes so much sense. And so just to give a concrete example and story of that. So we own a rental property. It was actually our second house. We did kind of what you did, Amanda, which is house hack it. And it's been a rental for 12 years and it just needed a refresh. Okay. So we ended up spending about $50,000 going in and doing a refresh. And while doing that, right, I increased the rent. I paid a painter. I bought a bunch of stuff from probably like Home Depot or Lowe's, like new lighting, all that kind of stuff. I paid a handyman to, install some of that lighting. So all of that, I actually even ended up paying a stager to come and stage the property before we took the photos. I paid a photographer to come and take the photos. And then, of course, I paid my real estate team to market it for me and get it on the market. So like, that's what you're talking about is like, I probably created, I don't even know if you include all the, the jobs at Home Depot and Lowe's, I created multiple, short-term jobs. Multiply that by hundreds of thousands of people who are doing that every year. That's a big boost to the economy.
Yeah, it's interesting because, it's election year right now. So there's a lot of talks about tax policy and how that incentivizes or disincentivizes people to do certain things. But yeah, you're exactly right. All the stuff that you've done is putting money back into the economy. And so those people who work at Home Depot now, they have income. They go out and spend it, which then helps some restaurant, right? Or a DoorDasher who then, was able to take that money in. So, and that versus the alternative, which is I made money and now I'm just going to sit on the cash in the savings account, or I'm going to use it to pay down my debt. People always ask me, hey, if I pay off my loan, why is there no tax benefit, no tax deduction? It's like, well, because you just paid off debt. You haven't really grown the economy.
Yes. Yes.
Yeah, that's so good.
So the tax deductions help us help the economy.
Yeah.
And so that's so powerful. It gave me chills when Wendy was describing that because the support of so many small businesses is really what it is, which really fuels the American economy.
100%.
Okay, Amanda, this morning I got sucked in to your Instagram. So much amazing content. So got lots of notes on taxes, but I've got to ask, tell us about your social media team. How do you have such a powerful, I'm sure you have multiple accounts. I was really sucked in Instagram, but tell us about that. How does that work? How have you built sort of an Instagram following?
Oh, I don't think I've ever shared this story publicly. So about a year and a half ago, my social media was almost non-existent. I was barely on LinkedIn. Brandon Turner sent me a message and said, hey, I noticed your social media sucks. Can I help you to build it and make it better? Oh. And the reason was because I was telling him I'm having a hard time finding, growing my team and finding really great people. How do you do it? And he said, well, because my social media, people love me and they want to work with me and work for me. And so he sent me this message like, hey, can I help you? Because it kind of sucks. So it took me down this rabbit hole and it was super difficult for me. I've done taxes for so many years. That part of it has been really, I kind of know the craft of it. But bringing it to social media was definitely a big challenge for me. How do you take something that's dry, non-sexy, nobody cares about, put it in a 15, 30-second clip, have it be somewhat valuable still, So yeah, that was kind of the journey I went down. But yeah, it's been fun to learn how to do all this stuff. I didn't even know how to log in really to Instagram.
Wow.
To where it is today now. But yeah, it's...
What a story.
We're going to call it Taxi. It's like sexy taxes. Bringing Taxi back.
Yeah, that's cute.
I like that. I love that. I'm going to do a reel like that. Yes.
Tag Wendy.
I will.
Okay, so that was like a couple years ago. Brandon says your social media sucks. And then now you've got like 46,000 followers on Instagram. You got a massive YouTube. Tell us a little bit of the tactical around that. Like, did you have a strategy or, do you have a habit or what is your habit?
Yes, habit is huge. For me, I have a non-negotiable. So I have a date. I have time each week that's dedicated. It's blocked off dedicated for me to create content. It's only about 3 hours worth of time because I feel like that's as much creative time as I can handle. And then I got to go back to, doing the tax things. But yeah, what I do is I really try to take just what I'm going through in life not in life, but in my business and curate that into stories. So if you watch my stuff, a lot of that is common mistakes. So what I just saw on a tax return I reviewed, someone who didn't take accelerated depreciation on 80 properties. And so, because I'm always encountering things like that. So it just creates content for me to share.
You're tax shaming people. Yeah, without naming them.
I actually had a client yesterday, a new client, their CPA messed up big time put all of their rentals in S corporations. And so that's another tip, guys. If you have rentals, don't put them in S corporations. But anyway, this whole mess that we have to unwind with her current CPA. And she said, feel free to tag and share my story on your social media because it was so bad.
Yeah. Well, that's how people learn. You know, it's a great way to learn is through other people's failures for sure. So.
Yeah.
3 hours a week, you said.
Yeah.
You're building content, focus on mistakes, what you see. What does your team look like that helps you? So you build the content.
Yeah.
Do you do it all or tell us about that?
Yeah, and, it's like with anything, right? It's kind of like real estate too. It's really hard in the beginning and it gets better the more you do it. So yes, in the beginning, I kind of did everything. So I recorded it. I created the thumbnails for everything. I created the caption. This 30-second post has so many components to it. It's not just the post, right? It's everything surrounding it. And because I've been doing it for about 1.5 years now, my team can go back and kind of mimic what I do. So now there's a lot of information that they can mimic and kind of reword or rephrase. So team-wise, actually pretty small. So it's me, my 3 hours a week. And then I have an assistant here. She only does social media part-time because she also does a lot of client relation stuff and helping to schedule people. And then we have outsourced company that helps with a lot of the more technical things, like they actually post it and now they'll do the thumbnails and things like that. So yeah, not too much time.
I had an aha about social media because we teach something on the podcast about how to set up people for success. And we talk about how you do, I do, we do, you do, in terms of teaching them. And my aha with social media is you actually don't have to sit with them. And for I do, they can just go back to your previous stuff and that saves time. That's
so good.
It's such a powerful tip.
So good. Well, and with all of us, it's people just need to hear the same things over and over again.
True.
And you've got lots of new visitors who haven't heard it before. But what I'm curious about is what's been the impact on your business since you've been doing that? I mean, have you seen a growth in your business?
Yeah, it's really been phenomenal. My intent in going into social media was for recruiting, actually. As I was talking to Brandon, and he said he gets the best team players because of his social. And that was my original intent. And so from social media, we've hired some of our best tax strategists. And those are people who they follow me and they're like, wow, I really love that they do planning. And I'm a CPA, I want to learn, I want to do more planning, right? So it was really on point with the messaging and the intent. But yeah, outside of that, it has done just phenomenal for our CPA practice as well. I've met so many people that I would otherwise not have met. I don't know, maybe even including you, Wendy, because I was not part of social before. But yeah, I now have met a lot of people even outside of real estate. I have a lot of followers who are athletes or celebrities that are just hey, I want to do real estate, but I would have otherwise never crossed paths, right? Me in California and somebody else, in Washington, D.C. or wherever wouldn't have crossed paths. So it's really phenomenal.
So cool.
Brandon should have negotiated a little 10% retainer or something like that.
He always tells me he regrets not doing that, with all the people that he helps, right?
Well, he's so generous.
Yeah.
He doesn't view the world that way. So he would absolutely never do that. And I don't even think that he's that great of a negotiator because he's a little bit of a nerd that way too. You know what I mean? He's kind of I don't think I want to ask for it, but he's just so generous.
But yeah, I would just say anyone who's looking to start on social media, for me, it was so fearful because I have a topic that's just, I don't know that a lot of people care about versus a lot of my clients. All my clients that are in real estate, their content is amazing, right? Because they're at properties, they're on location. There's so many exciting things to film.
True.
But, I think just keep at it. Don't give up and it'll get better 6 months later and it'll even better a year later. And
well, today has been awesome. Thank you so much for sharing everything about building an empire and all these amazing tax tips. If somebody wants to connect with you, where can people find you, Amanda?
Well, my company is called Keystone CPA. I'm always so bad I never even mention it. So
I know. I actually wrote that down because I was like, she didn't mention it at the beginning.
I know.
Yeah.
So yeah, we have a lot of great free resources if you want to know how does real estate help reduce taxes. I used to tell people this is great. If you're a realtor, this is something good you can use, but it's also something really great your clients can use too. If you have friends or clients who are buying rental real estate, always feel free to share our website or our content with them because, again, my content is not geared for CPAs. It is geared for the investor, so it's easier to understand. So yeah, KeystoneCPA.com if you're looking for daily tax tips or you want to know what I'm up to, what I'm cooking every day. Instagram is the best.
If you want to hear about taxi,
Yeah,
if you want to get real taxi.
Yes, bring taxi back. Yes.
Bring a taxi back.
Instagram, I'm on there almost every day as Amanda Han CPA. And yeah, believe it or not, I actually answer my own DMs. Like I said, I'm pretty small in the influencer world. So I do all of my DMs. I mean, Wendy, you know.
Yeah.
I'm always replying myself. Late at night, of course. When my kids go to sleep, that's when I kind of binge my social media.
And then you've got a YouTube channel too, right?
Yes, I do. I'm just starting out my YouTube channel because I've noticed that on Instagram, a lot of my followers are always asking me for more info. You know, they're like, oh, this is great. Can you do something more in depth? So I started my YouTube channel, I don't know, a couple months ago. And so, yeah, that's the more in-depth version. If you're like, oh, wow, real estate depreciation sounds amazing. What does that actually mean? How do I do it? Then you go to my YouTube and you can, talk about that for 45 minutes.
And then the more in-depth version of that is your books. And what are your books called?
So we have 2 books. One is called Tax Strategies for the Savvy Real Estate Investor. And that's the beginner version. And then we have an advanced version called the book on advanced tax strategies. Not very creative or taxy, but that's what we call it.
I'm making it happen. I love it.
Wendy's so good with words. Oh my goodness.
I love it. Well, thank you so much for joining us today. I know you're a busy lady. It's just a joy to get to know you better, learn a little bit more about your story, all the way back to that condo that your grandma owned. I'm just have this picture of your grandma in my mind, and I just love that. And we'll put all that information in the show notes. People will be able to know where to find you. And obviously, if you guys need any tax tips, Amanda is your gal. And I just want to thank you for being my friend and for joining us today. It was really great to see you.
Oh, thank you guys so much for having me.
Thanks, Amanda. Well, guys, we want you to take these tips that you learned today and get out there and build big businesses. But don't forget that big life at the same time. Bye, guys. Thanks for joining us.
Bye, y'all.
This podcast is for general informational purposes only. The views, thoughts, and opinions of the guest represent those of the guest and not KWRI and its affiliates, and should not be construed as financial, economic, legal, tax, or other advice. This podcast is provided without any warranty or guarantee of its accuracy, completeness, timeliness, or results from using the information.